Today, Bitcoin recovers from an overnight sell-off that pushed the cryptocurrency below $56,000. Polygon kickstarts its migration from the Matic token to the new Pol token, and Hallene of CMT Digital breaks down what crypto sectors are getting the most attention from venture capitalists. Welcome to CNBC's Crypto World. I'm Talia Kaplan. Crypto markets are stabilizing from an overnight sell-off that briefly pushed Bitcoin below $56,000. By noon Eastern, the cryptocurrency traded up about 0.75% to $58,130. Meanwhile, Ether gained about 0.5%, and Ripple's XRP token fell slightly, trading at 56 cents, following reports of the issuance of a Ripple US dollar-backed stablecoin in the coming weeks. Taking a quick look at Bitcoin mining stocks, they're on the rise as of midday, even after a report from JP Morgan found that Bitcoin miners faced record low mining revenues, averaging around $43,600 per exahash a second. By noon Eastern, Riot and Core Scientific were among the strongest performers, up 2.8% and around 6.2% respectively. Marathon inched about 0.1% higher, while CleanSpark gained about 0.25% after falling sharply the day before, following the release of its mining update for August, which showed that the company mined less Bitcoins last month compared to the month before. Okay, let's talk about the top stories. Polygon's migration away from Matic and toward a brand new crypto token is underway. The blockchain scaling solution has rolled out a network upgrade to convert Matic tokens to Pol tokens. Pol will now be the native token for gas and staking for Polygon's POS, or proof of stake system. If you use the POS system, you don't have to do anything to convert your Matic to Pol, but if you hold Matic on the Ethereum network, a centralized exchange, or some other networks, Polygon says the upgrade will enable holders of that crypto to convert those Matic tokens. Now, Polygon says the shift to Pol will help bring needed upgrades and prepare for future updates for the network, like zero-knowledge proof generation. As of noon Eastern, the Pol token dropped more than 7%. Next, two members of the Trump family appear to have fallen prey to a hack that promoted crypto schemes on X. The account belonging to Lara Trump, Donald Trump's daughter-in-law, shared a post declaring the launch of the family's crypto platform, World Liberty Financial. This is a project that has been promoted by Donald Trump and members of the family. The account then shared links claiming affiliation with the platform. An endorsement and link was then shared on Tiffany Trump's X account. She's the youngest daughter of the former president. Shortly after Lara Trump's post, her husband, Eric Trump, who is the son of the former president, shared that it was a scam and that Lara and Tiffany's profiles have been compromised. All posts related to the hack have since been deleted. Now, this comes a week after the Republican presidential nominee teased a rollout of a crypto plan. The Trump organization has promoted crypto products in recent weeks, of course, including World Liberty Financial, as well as a new NFT collection. Now, CNBC reached out to spokespeople for the Trump presidential campaign and the Trump organization about the hacks, but didn't hear back right away. Last, new data from the Federal Trade Commission shows a surge in losses from scams involving Bitcoin ATMs, also known as BTMs. Now, the agency estimates $66 million lost to BTM fraud through June of this year, adding to the already growing trend over prior years. Last year's figure is estimated at $114 million, following $78 million in 2022. The FTC says these figures likely only represent a fraction of losses, as the vast majority of fraud goes unreported. In the first half of this year, the median reported individual loss was $10,000. Now, the agency says cases often start with scammers impersonating companies like Microsoft or Apple, and that scammers even refer to BTMs as safety lockers. The agency warns that people should double check with companies or agencies if they receive unexpected calls and messages, and encourages people not to believe anyone who directs them to a Bitcoin ATM to resolve an issue. All right, turning to crypto venture capital trends for our main story. I spoke with Hallene, investment partner at the trading and VC firm CMT Digital, about what's getting the most investment dollars right now and whether AI is pulling some money away from blockchain investments. CMT Digital is a global blockchain and Web3 VC firm, and so I'm curious to get your firsthand observations on the space. According to DeFi Llama data, venture capital funds invested $634 million in crypto startups in July. That's up 15% from the month before. Now, last month, PitchBook released its Q2 crypto report, revealing that deal count dropped in the quarter, but the total deal value ticked up to $2.7 billion, which pretty much shows that on a deal by deal basis, check sizes were larger. However, PitchBook's Q1 report showed an increase in both deal value and deal count. So, what do those Q2 results signal to you, and what are you noticing in terms of VC investments right now?
Yeah, absolutely. I mean, I'll step back and say that we're a generalist investment firm in the blockchain and digital asset space. We like to be early to investments. We like to invest before categories are named. And I think what we're seeing a lot of right now is because of the maturation of the technology stack in the blockchain and digital asset space, there are just an abundance of new use cases for this technology coming online. And there's growth behind these use cases that's being fueled. And so that's why you may see larger checks going to fuel growth as opposed to a new idea at inception. And that's very exciting and very affirming for the space.
So, where is VC capital going right now? What crypto projects are getting the most attention? PitchBook crypto analyst Robert Lay told me infrastructure deals continue to get a significant amount of the money, including layer 1 and layer 2 scaling solutions. He said applications haven't been gaining that much traction as of yet, but PitchBook expects applications to be the next wave of investments that will come within the next 12 to 18 months. Do you agree? And are you seeing the same thing?
I would agree with that. I think that for the first time, I feel confident saying that the infrastructure stack, now there will always be upgrades to be had in infrastructure, and we see this in Web 2 software. This trend will repeat, and there will always be marginal improvements to be made. But I think we're at a place where you can build real kind of feature parity applications to Web 2 on the Web 3 stack. And that's extremely exciting for what the future holds. For us, we're not so much looking at the next layer 1 blockchain. We will look at a net new blockchain if that blockchain presents a net new use case. So, something like permanent storage, as opposed to a smart contract blockchain, say in the 2017 era, would have been something that we look at. Something, today that we're looking at are things in the DePIN sectors. So using blockchains as a mechanism to coordinate the deployment of physical hardware at scale, and really aiming to collapse the cost of some of these base level services that we take for granted, such as cellular or really Wi-Fi. That's an area that's got us extremely excited. I think that we're going to see the same thing in payments, and we are seeing that.
CMT Digital has 3 funds to date and is currently in its 4th fund, targeting $150 million. As you're raising for the 4th fund and are in conversations with limited partners, you note that ETFs represent a, quote, bullish signal to invest in crypto funds, and that the products present the perfect opportunity to get retail and institutional investors looped into crypto. Can you elaborate on that? How do you think the approval and launch of spot crypto ETFs here in the US changed investor appetite?
Yeah, I think that this is a major stamp of legitimization for the blockchain and digital assets space. I think that once you fall down the rabbit hole of Bitcoin and subsequently Ethereum and Solana and fall into the crypto world, you see people enter the top of the funnel. They don't really come back out. And so I think you've created a massive sinkhole, not just for dollars, but for mind share, for people to pay attention to this asset class and the true innovation that's happening inside of it. And so these are perhaps the gateways for completely new pools of capital to enter. At the same time, you have these massive financial institutions that are offering the ETFs actively investing in the base technology itself, not just in the wrapper for Bitcoin or at this point Ethereum exposure, but how do we apply this technology, this revolutionary technology, to our legacy business and upgrade, to a financial system for the 21st century.
Now, I recently put together a report on the merging of two popular technologies, crypto and AI. And on Friday, Coinbase announced the platform witnessed its first crypto transaction between AI agents. According to Architect Partners, AI is pulling some investment dollars away from other technologies, including blockchain. Data sent to us from the crypto advisory firm shows that in Q2 of this year, AI private investments totaled more than $40 billion, far surpassing crypto investments. Are you also noticing that AI is taking VC dollars away from blockchain investments?
Where I focus, so I use AI tools in my daily processes, and everybody at our firm does now, and we're actively automating several of our processes. And it's impossible not to pay attention to the change that's happening around us. As far as dollars being pulled from the blockchain investment space into the AI space, I think the most prominent trend that I'm noticing is actually a proposition to use blockchain rails to potentially control or be the payment rails for an AI to AI transaction, like Coinbase released a press release on this. I think that's very, very promising. These large language models are non-deterministic. You can get two different results by asking the same question. How do you monitor for integrity, consistency, and then especially when you introduce flows of value, how do you check that a task actually was completed, and the automatic release of funds can then be kind of provisioned. I think that there are the perfect rails for that are blockchain rails.
Hallene also provides his 12-month outlook for VC crypto investments. You'll be able to check out his full interview over at cnbc.com/crypto world. Okay, that's all for today, but we'll be back again tomorrow, and we'll see you then.